Good morning from Chicago traders. It's 8:01 a.m. Chicago time, Central Time on Tuesday, the 11th of January, 2022. Thanks for joining me yet again this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Episode number 2149 this morning. How are you doing? How's everyone holding up? Hopefully, you had a decent or at least a flat day, non losing day yesterday with the big V bottom. We'll talk about that in a minute. But first, let's just jump into the Convergent Trading pre market summary sheet. Again, convergenttrading.com for more information. Also, follow twitter.com/conv trading, CONV trading. If you don't understand any of the terms I mentioned here, and there are a lot of terms that I've created over the years that thankfully, and it's a compliment, are used a lot in trading right now, which is pretty cool. But if you're confused about terms that I'm using, the link at the bottom right in the orange box, go the number 2 ct.pro/glossary-terms is a big table of the words that I'm using, so you know what the terminology is to make sure that we're all on the same page. It is a language, just like with any skilled thing that we do. There are a lot of acronyms and things like that just to kind of speed up the communication. So what are we looking for today? Really mostly unchanged. The market has come back. The ES has actually made a move. It went to a high of 46.88. It settled yesterday 46.62. So it was up 26 points at the high, and now it is down 4 points. So overall, we are unchanged on the session. You can see the S&P's down 8 basis points, the Dow down 9 basis points, the Russell down, or the NASDAQ down 16 basis points. The NASDAQ has pushed to 15,734. And the Euro Stocks 50 as well as the DAX are relatively strong, but I had this pegged even when it was a lot higher. When I got into the office here at about 6:15 a.m., I still had the market risk exposures mixed because of the underlying action that was going on. There were clearly it had struggled to hold these higher prices, and the expectations we would come in and open a session mixed, and here we are. The main thing to pay attention to today is, of course, the Fed's Chair Powell confirmation hearing that starts at 10 a.m. Eastern. This is going to be significant. Powell is very likely to be confirmed. A lot of the people who voted to confirm him last time when he was nominated are still in power. However, I think there's a lot of pressure on these politicians to explain the cost of commodities, gas, the cost of life in general, the cost of labor, and they're likely to grill Fed's Chair Powell. So there's very likely, despite the statement he put out last night, or his office put out last night, he's very likely to reveal information that may not have been revealed at the FOMC press conference. The confirmation hearing is about 2 to 3 hours, could be as much as 3 hours, likely to be about two hours long, from 10 a.m. Eastern till noon Eastern, and there are likely to be a lot of pieces there. So expecting the market to respond today to what he says. You know, what word does he use? What inflection does he put an accent on it? Does it have an umlaut? All of that's going to be scrutinized today. I'm just being facetious and sarcastic, but we're going to do a lot of linguistics analysis today, as I was posting in the Convergent Trading Head Trader channel to basically prey on every little word that he mentions. So pay attention to this. The particular things we want to look at, excuse me, the particular things we want to look at or that are going to be scrutinized are attention, what he comments on regarding wage inflation, wage growth. Uh, Also, the other one is long-term inflation expectations. Is it still transient? If not, why not? Things like that. So just pay attention. There's going to be some potential whipsawing today. So that's the big piece. We have the vice chair confirmation on Thursday, maybe. That may also bring in some volatility as well. Looking across the board, you can see the indices are mostly down in the U.S., up in Europe. Crude is making another run for 80, which isn't a surprise. Although Crude put in a prime bar, again, discuss this in the Head Trader channel at Convergent Trading. That's where you go to get the latest and greatest in terms of information from the head traders. But that prime bar that was put in last Thursday is very important for Crude. The expectation is we are likely to pull back to 77.33, and we have not. We'll look at Crude very briefly today. The S&P multi-distribution profile, yet again, a lot of price discovery activity overnight, and that continues. We've got some pretty heavy volume, 250,000 contracts. The overnight inventory is 52% long, meaning about 52% more volume occurred above yesterday's settlement than below. The range is 35 points, which exceeds the expected value of 23.5 and the normal value of 33.75. That's one standard deviation from the point of control and from the mode. And the point of control is at 46.77. So we are in balance with yesterday's close and almost all of the overnight sessions trading during the Asian session. We are back at these prices. So we are fairly imbalanced after having tested up and have come back. So it's likely to be a kind of a whipsawy open. Looking at the pre-market, we see that the main players, these boxes are set so that they are the bigger the box, the higher the influence, or the heavier the weighting in the particular sector. So you can see Microsoft, heavy hitter in tech services, Apple and electronic technology, retail trade, Amazon is the big hitter, and so on and so forth. And we see that there's, Tesla is always either green or red. Tesla doesn't tend to hang out around 0%. I don't think I've seen. And so Tesla tends to be outstanding. We see some bright colors for Intuit and IBM. And overall, it was a lot grayer. This chart was a lot grayer about a half hour ago when I posted it in the Convergent Trading Head Trader channel, and is getting a little bit more red. So the overnight session looks balanced as well. In other words, the S&P 500, this represents the S&P 500 stocks, relatively balanced as well. Let's take a look at yesterday. First, I want to I've been kind of eliminating the review segment. Let me remove my face from this and enlarge it so you can see what was talked about yesterday. Yesterday, the primary idea was to look at where it opens, and the expectation is that we would move back to 50.55, expecting resistance, and really the main trade of the day is short, as you can see from scenario one, and I'm looking for the short to squeeze down into 46.12. We talked about why that is. I really, for anybody that missed yesterday's video or didn't see yesterday's video, it's 25 minutes long, but I go through the entire process of developing your reasons or plan for the day, and I explain why 46.12 was important, and that's the key target below, and I talked about if it breaches that, it's likely to pull down into the double low. Then the 12 is likely to be resistance for a break lower, and the longer run target would be 45.50. If we give up this area, 45.50 comes into play. There are other levels on the map above 45.50, and we did turn earlier. One of those levels is 45.75, which again I posted in the Head Trader channel, warning folks that the range statistics have been extended. The volatility sigma statistics, as Tendex in the Head Trader channel, Tendex Capital, you should probably follow him on Twitter as well, talked about how it's getting extended. And so we're looking for a bounce yesterday around 45.75. It pushed to 45.72.75. So it pushed through by a couple of handles, which we expect. We put in the IB. The IB is relatively wide yesterday. It's 57 points. Very wide IB, unusual IB. So a very directed effort to the sell side. But there it is, the call for 45.75. And then it turns around, goes to the mid, pulls back, creating a small opportunity there. And then once it pushes through the mid, it butts its head against VWAP. Once VWAP's done, the buyers take over, and we had what is called yesterday a neutral extreme up day. Neutral extreme up. Very important to note that we broke the IB low, so that makes it a normal day or a normal variation day type. And then we broke the IB on the other side, which is a rare occurrence. And it's even more rare if we break the IB on the other side and we finish at the extreme. So you can see we finished really within 5 points, despite the sell-off, which was basically 100 points from the prior day's settle. From Friday's settle to yesterday's low, about 100 points, something like that, a little under, maybe 95 points. And then we went all the way down there, only to come back and close 5 points below Friday's settlement, right? So we were almost unchanged on the day despite the big drop. This is important information. And also we finished right at the high. So settlement was at 46.62. The high is at 65. This is a neutral extreme up day. This has a high probability of being a prime bar at the low, or a reversal bar, or an intermediate term bottom. So pay attention to this 45, 75, 72 area. If we come back, the flush through here is likely to be very strong. This is generally a swing play, long for swing players and longer term players. Essentially what the S&P yesterday did was it advertised prices down very efficiently, very well. Didn't catch the short. It advertised lower prices very well, and it found its buyers. It moved low enough to bring strong buyers, which we have not seen for about 2 weeks since the end of the year. Last year, 2021, we have not seen buyers that sustain prices, and yesterday we did. So we found those buyers, people who are buying value, or not buying value because you don't buy value, but buying below value, or finding that prices are cheap for the current conditions. And so we come back and we finish near highs. So the expectation overnight is we would drift higher. And that's exactly what we did, right? We pushed to 46.88. We exceeded yesterday's overnight high of 46.8175. We're putting in a reversal. You're watching a reversal happen. And so today, being that it's opening right at 46.58 below the settlement, we're likely to have a two-way battle at the open. And we are likely to we're likely to see both sides fighting it out. So it's very likely to be a whipsaw open. And then, very shortly after the open, at 10 o'clock Eastern, or a half hour after the open, we get the Powell testimony and confirmation. So that's likely to add to the mix. So today is likely to be a very active trading. I know it's I'm saying a lot, but this is an important day. Yesterday, we closed the gap and we returned into Friday's range. And so we are likely to start climbing back to 46.83 up here, which we did overnight, and we're likely to battle it out. So here's what happened in the overnight session. We closed right here at the extreme. We built balance for most of the Asian session right against that. And then Europe comes in and squeezes to the top side. We get to 88.25. And then we have pulled back and we're holding steady at the overnight point of control. So what this has done is temporarily in the overnight session, remember, it's just the overnight session, we found sellers. We found an extreme. So we found an extreme with a V bottom yesterday. We found an extreme with a tweezer top today. However, the tweezer top's being made in the extended trading hours, so it's not as significant. But we are back here in the middle, so expect a noisy, whipsawy open. That's basically what I'm driving at. So looking at the heat map here on Edge Pro X just for a minute, there was a lot of algo activity yesterday. We have some size at 46.70. That's resting and looking deep in the book. We really see that it's just the 5-point strike prices that have some size. So there's option stuff going on in here. But overall, not seeing a book that is steady or stable, and not seeing a heat map that is steady or stable either. And then looking at the overview, we see that the S&P kind of moved away and has created this very sharp bottom. So did the Dow, so did the NASDAQ. The NASDAQ still has a lot of separation to VWAP, still looks weak. The RTY is the same. This monthly VWAP is likely to be a cap. It's at 47.06. By the time we get up there, it'll probably be around 47.02, 4700. Pay attention to that. Let's move on to what's expected for today. Actually, I did promise, I'm sorry, but I did promise a look at crude. Crude this morning, really, yesterday, I found crude to be a pretty tough trade. Very, very choppy. It's just trading this kind of wicked channel. But most of all, crude had a balanced day yesterday. It broke the IB low on the pit session. And then today, it just came up strong and it pulled back. It didn't quite pull back to where I expected. I expected crude to pull back to 48.80-ish, 48.78 to 75. And then I expected a quick push into the upper distribution from last Friday, which we have moved into. Crude kind of stole the trade overnight, did not pull back into the 78.80, turn around at 78.96 and has pushed back to 80. So crude is taking back this key area. Looking at crude in the bigger picture, let me pull up my my flex levels chart just to kind of look at the big picture. Here's the prime bar. This is the prime bar. This color stinks. I'll make this quick. Here's the prime bar right here. This was last Thursday's bar. That's the high at 80.47. This was expected. My expectation on crude is that it would pull back to right there at 77, 77.70, 77.60, 77.30. 33 right here, the 50% pullback and so on. And it turned a lot earlier. I think it moved yesterday, it moved to a low of 77.83, and it's coming back. So what this is it's an impulse from Kazakhstan's news pullback, and now we're likely to get a continuation, and I'm looking for it to push into that 81.25 next, 81.25 next, but crude has a lot to work through still. All right, let's get to our plan for today. Stock zones turned on. All right, here's our plan for today. Today, pretty choppy open. You can see that we're very close to the overnight low. I'm expecting it to make an attempt into the high, back over the prior settle at 62, but I'm looking for this to take back some of what it did yesterday. I'm looking for 46, 33, 32 to be tested. I expect this to consolidate here, and then I'm expecting it to be a fairly choppy rest of session. After Powell gets done at 12 Eastern, I'm expecting the market to just take a break. There was a lot of territory that was covered yesterday, and I'm expecting that commitments have been made, and now it's time to wait for the next swing. The secondary is a push that squeezes the overnight low and retests the 46.40, 46.50, 46.48, and then I'm looking for an impulse back above the overnight point of control, and then for it to start working itself towards that 46.83 MC point of control and hold steady. And what that would do is put us back into complete balance and waiting for the next move. There's not that much on the calendar for the rest of the week. We do have CPI coming tomorrow, and that's likely to figure in, but beyond there, it's likely to take a rest. There's a lot of content here. There's a lot of volume in this area before it starts to move away. And once it gets above 47.07, 47.05, we're likely to start making a run for the higher swings at 47.50 and so on. Okay, good luck, and I'll catch you tomorrow. Take care.